Welcome to JC's Stocks and Markets podcast for May 15th, 2026. I am JC. I've been investing in the stock market for 40 plus years. Every other week I publish a new idea on YouTube regarding new stocks or ETFs that I research. My intentions with these podcasts are to share my thoughts and opinions on some stock and ETF picks with an emphasis on dividend-paying securities. I'm only trying to help us both make a buck. I'm not doing this for money from anyone. I don't need money for this podcast. The opinions shared here are my own. They're just that, opinions. Disclaimer: do your due diligence before investing in anything. That's either stocks, land, businesses, what have you. Do your due diligence. With that, let's go make some money. On this week's episode of JC Stocks and Markets podcast, actually every other week, I'm featuring something I just stumbled upon, which I'm really intrigued about. This is the Global X Nasdaq 100 Covered Call Growth ETF. It's QYLG is the ticker symbol. It's a covered call or buy right strategy fund again for the Nasdaq 100. But what this one does, which I really kind of like, because this one helps you keep a little bit more of your alpha, is that it writes corresponding call options. It buys all the Nasdaq 100, but it sells corresponding call options on approximately 50% of the portfolio value of the stocks in the same index. So of the Nasdaq 100 stocks that it owns, it sells calls against half of its position. So you can allow, if it hits the strike price on a covered call, that's above your actual price. Your strike price is above the market price at the time. You can continue to gain alpha or share value if it hits that strike price on any given security. So that's really interesting to me. You'll note on this slide here that it also says the 12-month distribution being 15.94%. It's a little misleading because they had one special distribution, and you'll find that the distribution rate is probably closer to the 6% that it shows beneath that. It is a monthly distributor, but without the special distribution, you're really more like a 6.5% return, which is still really good. Plus, of course, you're holding the Nasdaq 100. I find that to be really interesting because you still get a good return at 6.5%. That's really pretty good. From this slide, this next one is dividend history, and you can see in December it paid a $2.77 special dividend, and it kind of skews that distribution rate to be 15%. So don't, again, you have to look at what you're investing in. Essentially, what you look at, between 13 cents and about a little over 20 cents or 27 cents is your average payout per month, which is still pretty good for a stock that's about $29 a share. So anyway, do your due diligence, take a look at some of this stuff. The last slide I've only got 3 this week, and like I said, this is a pretty straightforward one. It's a Nasdaq 100, the QYLG. It's a Nasdaq 100. They sell covered calls against half the positions. But what I want to show you here with this last graph is that, I'd like to take a position too, and I don't feel good about buying it right here, considering the frothiness. And today's, during this recording, the Nasdaq's down, about 0.5% right now, and it may be heading down for a little while because things have been pretty frothy. But I'm looking at this at about $25 a share, $29.50 a share right now. But I can see it, coming down closer to this $27.50 strike price. You can also see in the same graph, you got the stochastics at well over 80. When that heads down and gets closer to 20, that's when you're looking at an oversold condition. That's a good idea to wait for that. And of course, the Williams %R is another one. Right now it's above, it's well above minus 20, and it wants to be down closer to minus 80. If those 3 scenarios occur, I think you'd be down near the $27.50 strike price, or the price that I'm looking at. I shouldn't say strike price, but the price that I'm looking at for my potential purchase. All things being the same, if it's there, I'm going to try to rearrange some furniture in my account so that I can clear up some cash to buy some of this, because I like this idea. I like the idea of a little bit more alpha and giving up a little bit of the the dividends for a good portion of my portfolio. Anyway, with that, I hope you got something out of it. QYLG. JC Stocks and Markets Podcast, signing out. The intro and outro song is a song called She's the One by a band I used to play in called Just One Goat. The song is one I wrote, and the band recorded it. They did the magic. Has some special meaning to me. Again, happy investing. Do your due diligence, and we'll see you next time on JC Stocks and Markets Podcast. Happy investing. Bye now.
I know I'm not that beautiful, but I know my way back home. A loving girl is physical, but I never have to roam. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one. Yeah, she's the one. Yeah. Wasted all this time. She's the one. Oh, she's the one.